Hello traders, this is Day Trader Matt with businesswithtrading.com doing an Emini Trading Room recap for the 24th of November, Monday. And today was another great day in the markets. We had a quite a large gap up, and then the market pretty much just chopped sideways the entire day. A few ups, a couple downs, but mostly sideways the entire morning. Today we did make 3 trades and ended up pulling 7 3/4 out of the market. Our first trade was pretty much off the open. We got long and we were able to ride that up and then roll it into a short up here, and we took profit down in this region here and got long a little bit lower, and we were able to pretty much take profit up here. So it kind of is what it is. We were done pretty early. After we did take that, the market kept coming lower. It kept kind of going sideways, very, very choppy, going lower still. And we kind of just watched it to see what it was going to do. It eventually supported here. It did buy up a little bit, and then it started to sell back down and then just moved sideways into 12 o'clock. It is what it is. And that's what I always talk about, is there's no reason to place a lot of trades. Trading is about making money, and to make money, taking the least amount of trades is actually a good strategy. And it's a strategy that I have actually employed for quite a while, many, many years. And after this, the market, it was moving, but it just didn't look good to me. And that's one thing you kind of have to look at and be okay with yourself. Are you going to take a trade? Does the trade look good? Does the trade look okay? How does that trade look? That's one thing I definitely go over with a lot in my course and when I'm coaching clients and students, is how to read the market. In this industry, there's a lot of bullshit. A lot of people try to teach, use these indicators to watch the market, and they say they're watching price action when in reality they have like 3 different indicators and oscillators up there, and that's not price action. They know it's not, but for some reason they like to act like it is. Act like, you use these 5 indicators together, or this indicator that, they developed themselves. It doesn't really, make for good trading. Using an indicator that was developed 40 years ago to trade the markets 40 years ago, it's not the best use of one's resources in today's age, in my opinion. There's much better ways to read the market. And I definitely, teach students that. I have a ton of fun, going over things and going over strategies, and, this is how you read the market. And, if you don't take a trade, it's okay. And that's really the style that I use every single day when I go into a trade. Right now, I've gotten a lot of great feedback with the trading course I'm offering. With the course, anyone purchasing before November gets 3 30-minute sessions with me, one-on-one, to talk strategy, talk trading plan, anything that you want. And also next year I'm rolling out some webinars to go along with that. I'm gathering questions, gathering feedback, the most asked questions, and I'm just going to go through webinars for students. So that's another thing that I'm going to start probably a couple months into next year. So probably the end of the first quarter, beginning of the second quarter next year, we're going to start rolling that out as well. So we have some great stuff in the works. So if you ever thought about taking part in the trading course, you get that. There's a guarantee on that. You show that you've gone through the course, you've tried to make it work, it doesn't work for you, get your money back. That's how things should be. That's really how everything in life should be. If you get information, doesn't work, you know, really that information is worth nothing, right? So anyway, wanted to talk about that a little bit. Wanted to talk about today just because it was so choppy. You know, and in a day like this, you know, I've seen people, I've seen new traders, I've seen traders who have been around for a couple years, just struggling, just get chopped to death on a day like this, because it's moving sideways. It kind of comes down a little bit and then comes back up here, you know, and I've seen it happen a lot, and that's one of the reasons why I always limit my trading, because in the business of trading, the entry is pretty much the only thing we can control. We enter the market at a certain area, and from there, price either goes in our favor or against us. And that's all that really happens. We can't control where price moves to unless we're actually working with a few $100 million. And then, you know, that's not really the best use of capital, is trying to make the market move yourself. So anyway, I wanted to talk about it a little bit. Hopefully it made sense to you. Thanks for watching. You can always leave comments below the video. If you want to email me directly, support@businesswithtrading.com. Contact forms on the website. Thanks for watching. Have a great rest of your day, and I'll see you back here in the markets. Thank you.